Welcome to Tesla Deep Dives. The pivotal topic on our agenda today is Beyond the Hype, Morgan Stanley's valuation sanity check on the Robotaxi Premium, and the reality of future autonomous revenue models. Forward earnings. Traditional automakers, they are stuck at 7x to 11x. This extreme multiple is the market staking hundreds of billions on one radical idea, that the future of mobility is driverless and their platform will dominate. B-roll, high-contrast graphic comparing Tesla's PE ratio, 190x, versus GM Toyota, 7x to 11x. Morgan Stanley, the institution that historically championed this Robotaxi Premium, has just performed a critical sanity check. Analyst Andrew Percoco took over coverage and immediately shifted the rating to equal weight, signaling caution. The question is no longer if robotaxis are coming, but how much of that revenue is already priced into the stock, and what happens if the timeline slips. This is the core thesis. The stock is fully priced for perfection, at a breathtaking 45% EBITDA margin. B-roll, animated chart showing the breakdown of TSLA's share price valuation components, highlighting the $90 per share for mobility. This nearly 40% cost efficiency is the ultimate barrier to entry, enabling massive undercutting of human-driven competitors and driving the long-term margin story. B-roll, graphic comparing two column charts, Waymo's cost per mile versus Tesla's cost per mile, $1.40 versus 81 cents, with a large cost efficiency banner. At current levels, the market is pivoting from the growth at any price mentality to the show me the revenue phase. The problem is that the stock's 190x multiple offers virtually no safety net for any delay in the robotaxi timeline. B-roll, real-time stock chart of the company with an arrow pointing to the late 2025 downgrade date and a banner, Valuation Sanity Check. Competitors like Waymo currently demonstrate a clear safety lead, traveling an estimated 360,000 miles per accident, while early data for the competitor's Robotaxi system sits closer to 50,000 miles per accident. Safety and local regulatory approval are the ultimate choke points. Competitors like Waymo currently demonstrate a clear safety lead, traveling an estimated 360,000 miles per accident, while early data for the competitor's Robotaxi system sits closer to 50,000 miles per accident. Safety and local regulatory approval are the ultimate choke points that can delay revenue by years. B-roll, montage of headlines about autonomous driving incidents, regulatory hearings, contrasted with Waymo Cruise LiDAR systems. Like Optimus due to execution uncertainty. If the market aggressively reprices the stock from an AI multiple back toward a hardware multiple, the drop-off is severe. B-roll, graphic of the bear case price target, $145, with red downward pointing arrows, followed by a fleeting image of the Optimus robot with a large question mark overlay. By 2040, the true premium isn't the autonomous car, but the recurring software revenue, which is projected to account for nearly 60% of future EBITDA. B-roll, animation showing a factory assembly line morphing into a graphic of a data center or a server farm with a subscription revenue counter increasing rapidly. The Robotaxi Premium is real, but so is the risk of a reality check. The market has baked in an extraordinary level of technological and regulatory success. Investors must monitor two things. First, the regulatory progress of unsupervised full self-driving in major metropolitan areas, especially in 2026. Second, look for competition. Waymo's next-gen hardware, expected to scale around 2027, will challenge the cost advantage. This story is a high-stakes bet on execution. B-roll, split-screen graphic. Left, TSLA Cybercab concept. Right, Waymo vehicle. Text, monitor, 2026 rollout, and 2027 competition. The ultimate question is not if the technology works, but if the valuation can survive the regulatory reality. That's the core of the Tesla Deep Dive. Let me know your thoughts in the comments. Please like, subscribe, and hit the notification bell. Your engagement fuels our critical research.